Hello, everyone. November is looking way better than October. Like, seriously. A lot of the stuff that's been weighing us down, that's about to be in the rear view mirror. Look at what just happened after the FOMC meeting. The federal funds rate got cut again, and quantitative tightening wraps up December 1st. This is actually really good news. Markets thrive on predictability, right? That's why this matters so much. Now, yeah, I saw the sell-off the other day, even with all this positive news coming out. Same thing with the China tariff situation looking like it might get resolved. But here's what I'm seeing. These headwinds, they're about to flip and become tailwinds. That's the shift that's coming. And look, when it comes to XRP and this market cycle, I genuinely think we're heading toward a boom, not a bust. Think about it. If this were actually the top and we just hung around this price range for weeks or months without a crash, that would be completely bizarre. We've never seen a bear market start like that in crypto's entire 16-plus year history. It just doesn't add up for me. Okay, so check this out. You know what the market cap was right before the election? $2.2 trillion. Now we're sitting at $3.6 trillion. Can we just take a second to appreciate that? Like, seriously, get some perspective here. And if your coins aren't up, I've got to ask, what are you even holding? If you've got decent exposure across crypto, mostly large caps with some mid caps mixed in, you should be doing fine. So what's in your portfolio that you completely missed this run? I'm not saying every single coin should be up a year later, but come on, how did you miss this much of the move? The market is up big time. Think about that for a second. We're talking over 50% gains. And that's after the pullback we just had. It's still up that much. XRP is at $2.50. Bitcoin is at $110,000. These are the prices after things cooled off a bit. Put yourself back a year ago. If you were around then, and I know most of you watching weren't, wouldn't you have been absolutely thrilled to know we'd be at these levels? Like, honestly, the answer is obviously yes. All right, so check this out. Charlie Bolello just dropped some really interesting data about the S&P 500, and I think this is something everyone needs to see. He's breaking down bull markets versus bear markets. You know, how long do they actually last? What's the real difference between them? And here's what he found. Bull markets have lasted 5 times longer than bear markets on average. Bulls plus 254% over 5 years. Bears negative 31% over just 1 year. Markets spend far more time growing wealth than destroying it. Why interrupting compounding is the biggest risk of all. And you know what? That's exactly my approach too. After I buy, I literally do nothing. Just sit back and let it ride. And guess what? It actually works, folks. It works in the stock market. It works in crypto. You get yourself some broad exposure, and that's it. Done. I honestly don't understand why more influencers aren't shouting this from the rooftops. This simple method that actually works. Instead, they could be encouraging people to just consider this approach, right? Rather than jumping in and out of positions constantly. Rather than pushing expensive courses so you can learn to trade and time the market and all that stuff. Look, that's not helping the average person. That's just not. Now, if you personally want to dive into trading, fine, go for it. But here's the reality. Only about 5% of traders are consistently profitable. 5%. That's not a strategy for regular people like me. And I'm guessing most of you watching this fall into that same category, right? But here's the beautiful part. You don't even need to be a trader to get ridiculously wealthy in crypto. You really don't. You just need to hold. That's it. Buy and hold. Look, I'm going to be straight with you about something. Be really careful who you're taking advice from. If someone's telling you the sky is falling more than 20% of the time, they're just wrong. The math doesn't lie. Bear markets only happen about 20% of the time. The other 80%, the market's climbing. So what does that mean for you? Just ride it out. Hold your positions through the bumpy patches. History backs this up over and over again. It's genuinely one of the smartest moves you can make. Now listen, I'm not your financial advisor. You've got to do what works for your situation. Sometimes selling makes total sense. Maybe you get hit with a huge medical bill out of nowhere. Maybe life throws you a curveball. I completely understand that stuff happens. But here's what I need you to hear. Most of the time, you've got to toughen up a bit. The numbers keep going up. There's no logical reason to panic right now. Even if we were heading into a bear market, which I really don't think we are, freaking out still doesn't help you. Kick those emotions to the curb. Make decisions with your head, not your feelings. That's all I'm saying. So check this out. There's this analyst, Cryptos Are Us. Pretty big name in the crypto space. The guy's got 293,000 followers on X, and his YouTube channel, somewhere between 800,000 and 900,000 subscribers. Massive following. I actually think he's one of the more reasonable voices out there. Keeps a level head about things. Anyway, he just posted something interesting. Mike Novogratz, billionaire investor and CEO of Galaxy Digital, a crypto-focused merchant bank, said, quote, "That's a monster pool of capital, more avenues, bringing people into this ecosystem," end quote. With global M2 money supply rising, much of this newly issued liquidity is likely to flow into digital assets, amplifying adoption and demand. You know what? That's actually really solid speculation. It's backed by real data. Look at your screen right now. See that yellow line? That's global M2. That's the liquidity sloshing around in the system. And those red and green candles, that's Bitcoin's price. Now, you're not going to see them move in perfect lockstep every single day. But here's the thing. Bitcoin follows global M2 about 90% of the time. It tracks that liquidity like clockwork. That data comes from Raoul Pal, by the way. In my opinion, he's one of the best sources you can find for understanding crypto and markets overall. The guy knows his stuff. So when people say it doesn't work anymore, that the old patterns are dead, that Bitcoin's just not going up for whatever vague reasons they throw out there, good luck with that thinking. You're going to need it. Meanwhile, the rest of us are building real, life-changing wealth while this thing plays out exactly like the data suggests it will. But hey, you do you. Enjoy those ramen noodles for the rest of your life if that's the path you choose. All right, so check this out. There's this post from a chart analyst who's also a tech dev and pretty well known in the space. So what are we looking at here? At the top of the chart, you've got Bitcoin's price doing its thing. Pretty straightforward. But down at the bottom, that's where it gets interesting. There's this separate metric tracking the business cycle signal. And here's what he says about it. Business cycle-wise, in macro structure-wise, not just Bitcoin. The most recent point of a similar market positioning was October 2020. Then Bitcoin was $10,000 and Ethereum $300. Okay, so think about this for a second. Ethereum was just sitting at $300. Fast forward to now, Bitcoin hits $100,000 and Ethereum's at $3,000. Well, actually, Ethereum's higher than that right now. But still, you know what I mean. I think that's roughly right. It's gotta be. Yeah, almost 4,000, like 3,874. He's rounding. Look, it's fine. I get where he's coming from. But here's what I really want to dive into. The business cycle. So the business cycle is basically the economy going through these phases over and over again. Expansion, peak, contraction, recovery. Pretty simple concept, right? Now here's the thing. There's no one-size-fits-all formula to measure this, but economists have 6 main metrics they watch to figure out where we are in the cycle. And trust me, this stuff matters. What are those 6 things? Inflation, employment, money supply, manufacturing strength, corporate profit trends, and central bank policy. When you look at all these together, they tell you the story. Is the economy shrinking? Is it growing? That's the business cycle. That's what it boils down to. So here's the thing. Crypto usually takes off when there's more money flowing around and the economy starts picking up speed after things have been slow. And when I look at what's happening right now, it reminds me a lot of late 2020, right before crypto absolutely exploded. That's exactly why I kicked off this video the way I did. Look, this is just my opinion, nothing more. But yeah, I genuinely think this cycle is going to finish strong. Like, really strong. Not just for crypto across the board, but for XRP specifically. That's where I'm putting my money. Now, could I be completely wrong? Could it crash to zero and I lose everything? I mean, sure, technically that's possible. But do I actually think that's going to happen? Not even close. I sleep great every night. Seriously, in fact, if I wasn't holding XRP right now, that would actually stress me out and keep me up at night. I'm all in on the volatility. I welcome it with open arms. That's what investing is all about, right? The ups and downs, the swings, the excitement. So yeah, my friends, number go up. Crypto Seth posted something interesting, and he's basically asking, do you think that Bitcoin has been ranging for 6 months at the top so that all the plebs, all the dumb retail had a chance to exit at the top? Quote, here's the thing. That theory, I'm not buying it. Why? Because show me one time in Bitcoin's history where this has actually happened. Just one. You can't, because it doesn't exist. Bitcoin tops don't work like that. The entire crypto market doesn't work like that. Think about what he's suggesting. Bitcoin hits its peak, right? And then instead of doing what it normally does, it just decides to chill there for half a year, 6 months, just sitting pretty at the top, politely waiting while everyone figures out their exit strategy. Come on. When has the market ever been that polite? When has it ever given anyone that kind of heads up? It hasn't. Period. This idea that we're getting this massive warning signal, this extended opportunity to bail out, yeah, I'm not seeing it. The data doesn't support it. History doesn't support it. So no, I really don't think that's what's happening here. All right, so I stumbled across this post from Credible Crypto where he's analyzing my Bitcoin chart. And guys, you need to hear this, even if you're sitting there thinking, I don't really care about Bitcoin. Look, I get it. I'm an altcoin guy myself. XRP, that's my bread and butter. It's hands down my biggest position. But here's the thing, you can't ignore Bitcoin. It's basically the puppet master for the entire crypto market. So Credible Crypto drops this post recently about Bitcoin, and his comments section is absolutely melting down. People are having full-blown panic attacks like, oh no, we're going under $100,000, everything's doomed. But let's get some perspective here. If we dip back below $100,000, we're talking about a 20% correction from the top. That's it. And guess what? We've seen 5 bigger drops than this during the current bull run. Take a look at these pullbacks stretching back to 2023. I covered every single one of these moments. And what was everyone saying? This is it. Crypto's dead. Then it happened again. No, really. This time it's actually over. And again. And again. So listen, here's the thing. Every single dip, people start screaming, this is it. We're done. Pack it up. Crypto's over. This one, end of the world. The last one, also end of the world. The one we're sitting in right now, yep, you guessed it, end of the world. And we haven't even touched 100K on the way down. We're literally still above that level, and the panic buttons are already being smashed. You feel me? So he comes out and says something that honestly needs to be tattooed on every trader's forehead. If a measly 20% drop from the peak is all it takes to shake you out of your position, you're just not built for this game. Plain and simple. Think about it. We're swimming in one of the craziest, most volatile markets that exists. You can't tiptoe around volatility here. You've got to embrace it, live with it, maybe even learn to love it a little bit. But then the doubters roll in, saying, cred. By the time we slide down to $74,000, the entire market's going to be a graveyard. Everything will be wiped out. And that's his red line, his do-or-die level, $74,000. Now here's where it gets good. He fires back with 3 solid points. Point number 1, nope, they're not all going to die. Point number 2, let's say things do take a beating. If this turns out to be just a shakeout before the real rally continues, every single one of these assets is going to rocket back up even higher than before. And point number 3, this is the big one. That $74,000 level isn't something he just made up because it sounded nice. This is a level that traders and investors in the actual market have repeatedly shown us is significant on those bigger timeframes through real buying and selling action. Nothing more, nothing less. And yeah, I know, it's sitting 40% under those monster $126,000 highs we hit. But check out this chart for a second. We've already seen 2 massive 30% pullbacks from the highs, right? And guess what? Both times, they were just corrections before the price absolutely exploded higher. So here's the thing. You can't just pick some random percentage drop and say, okay, that's it, I'm out. Because you'll probably end up panic selling right at the bottom of what's actually a totally normal correction for this market. It's all fear and panic talking at that point. Look, when you're dealing with markets this wild, and I mean genuinely volatile, where 20 to 30% drops are just part of the game before we see 50 to 100% rallies, your bigger picture support levels have got to be deeper than those swings. That's just logical. So when people say $74,000 as a major support level sounds crazy, it's really not as insane as everyone's making it out to be. The chart I'm showing you here represents that bigger picture view, and it should remind you that any dip below $100,000 but still above $74,000, that's just short-term noise before we continue this parabolic run. That's a huge vote of confidence right there, and honestly, it all just makes sense logically. I'm curious what your perspective is on this. You buying what I'm saying, or nah? Hit me up in the comments section. But yeah, from my angle, everything here lines up perfectly. Crypto Wizard just dropped something interesting. We've got ourselves a bearish rejection happening right now. Now that's a beautiful retest. Bitcoin dominance pulled back during the October 10th crash, but it closed the month having rejected the broken higher low trend line with a shooting star weather of the storm. Look, what we're seeing with Bitcoin dominance is pretty exciting. It looks like it's gearing up to drop further. And before you panic, this is actually a good thing. Here's what most people don't realize. Bitcoin can pump while its dominance shrinks. Sounds weird, right? But if you look back through crypto history, this pattern shows up again and again. And when dominance starts falling while BTC rises, that's when the alts wake up and the party really gets started. So before anyone starts freaking out in the comments, let me be crystal clear. We're not seeing anything break down here. The structure is holding. Everything is still moving exactly how it should. So Crypto Insight UK just dropped this about XRP. People think XRP top is in, and liquidity looks like this with this little open interest. Literally, mostly shorts. Now listen, I know there's a crowd out there already writing XRP's obituary. They're convinced we've seen the peak and it's downhill from here. But hold on a second. Let's talk about what the actual data is showing us, because it tells a completely different story. When you pull up the open interest metrics, something doesn't add up with the top is in narrative. Picture a genuine cycle top for a moment. What does that environment look like? You've got liquidity absolutely exploding. Retail traders are opening long after long, convinced they've found the money printer. Leverage is cranking up to insane levels because everyone thinks they're getting rich. That's your textbook market peak. Now snap back to what we're actually seeing with XRP. Open interest, still pretty modest, and most of those positions are shorts. Traders are actively positioning for XRP to fall. Does that sound like euphoria to you? Because it sure doesn't to me. Tops don't form when half the market is betting on a crash. They form when nobody can imagine prices going down. What we've got here looks way more like rocket fuel for a squeeze that's going to wreck those short positions. That's my read on it anyway. Don't get shaken out by dramatic headlines trying to convince you the ride's over. My prediction? We're heading for a boom, not watching a bust unfold. This is the post from chart analyst Daily Martinez. For XRP resistance stands at $2.80 and $3, while support holds at $2.50. All right, so another analyst chiming in with pretty much the same picture. I mean, look at where we are right now. We're literally hanging out in that sweet spot between support and resistance. And guess what? Despite all the panic and negativity you're hearing everywhere, nothing's actually collapsed. The structure is still holding up just fine. Now check out what chart analyst CW is pointing out. In the short term, XRP is two selling walls. If it breaks through these, there are no specific selling walls until about $3. Okay, this is where it gets interesting. So we've got two walls standing in the way. If XRP manages to punch through both of those, there's basically open road all the way up to $3. No major obstacles, no big resistance zones. That's why this level matters so much. Definitely something to watch closely. Alright, so I've got to show you what Chart Nerdy just dropped. They said XRP EW5 in motion. A large spring to support before a breakout towards all-time highs. Now look, they're calling out $2 as the magic number we need to keep our eyes on. That's the support base that really matters here. If we start seeing a wick sneaking below that trend line, that's when things get spicy. And we've got another analyst basically singing the same tune, pointing right at that $2 support. But wait, there's more. Same person drops another post saying XRP dominance remains above a golden cross formation on its monthly 20/55 EMAs. That's 12 months of accumulation above key moving averages. Being above the 3% ratio is bullish, period. Honestly, that's a pretty reasonable take if you ask me. So when I look at this percentage, my feeling is it's going to push way up. Where does it stop? Hey, I have no clue. I'm not going to sit here pretending I can predict exact tops. But the direction, yeah, I'm thinking we're going way, way higher. I genuinely believe we're going to see it climb a whole lot more before we even sniff the peak of this cycle. So that's my 2 cents. I think the real fireworks are still coming. But real talk for a second, I am absolutely not a financial advisor. Please don't go buying or selling stuff because some guy on YouTube told you to. That would honestly be a really bad move. All right, folks, I'll see you in the next one.